Okay, so there's some good news with interest rates in this video. So we have been in a channel initially since the rates started going up back when they started going up in May of 22. And then as they have gone worse and worse, we've maintained this channel that we've been stuck in. Now this chart's inverted. So as this comes down, rates go up. Now, we fell out of this channel back in October of 2023, which was some of the worst rates we've ever seen. And fast forward, we've made our way back into this channel, and now we're getting to the upper end of that channel in the positive way. Also, amongst all the lines on the chart, some of them are more important than others. So the ones that you see that are very thick have more bearing and more importance than the ones that are a little bit thinner. If you look at this red line has been a support level for the entire bond history over the last 20 years. The reason that matters is when we fell below that support level, well, if it's a support and you fall below, now it turns into your ceiling of resistance. Because it has been such a matter of importance or a point that we've used as support for 20 years, when we fell below it, it took numerous attempts for us to finally get it back above it. There's attempts number 1, 2, 3, 4, 5, 6, and then finally on the 7th one, we were actually able to break above. So that's the first thing that I want you to take away from this video. The second is there is measurements that we can look at the charts as far as levels of resistance based off of the last decline of where the rates essentially got to the worst point and then started to rally thereafter. That's the turquoise line. And then the most important one in this particular context for this video is the channel itself. We were able to break through all three. And so essentially our next stopping point or our next point of contention is going to be right here where you see this orange dotted line. Now from there, if we're able to break that and get above it, then we're going to be going up and we're going to go and start fighting these two. Now, if we're able to break these two lines, at the very least, you're going to see conventional rates mid fives, high fives. You're going to see government back into the fours, or at least high fours. Now, granted, there's going to be discount points and costs associated to get us to that point, but the point is we're going to see some rates that we haven't seen in a very long time. So that's the outlook, and that's the good news. Right now, trajectory is showing that we are going to go up and probably actually get above these levels of resistance. Now, in other videos that I've talked about with rates, we look at some of the other indicators. This is the divergence and convergence. What's important about this and what you understand is this is the momentum. And right now, our momentum shows that we're going in an upwards trend. And when things go to get worse or essentially go, for the bad, that's usually when they will cross to the downside. But equally, when it crosses to the upside and it's going that direction, that means we have a strong momentum to keep going this direction. So the probability of this happening is highly likely. And there is no pattern here that they want to intersect and cross for the downside. So we should be seeing this pattern continue for the next few days. This is why you do not want to lock your rate at the current moment. If we go and look at the RSI or the Relative Strength Index, it's the same thing. We crossed here at the bottom, so now we're back onto the upside. While there's a small, tiny indication that it wants to go back and cross, reality is that we will probably maintain pricing and improving and getting better over the next few days. And there's a good chance that that will actually turn around and start going back upwards again. Our goal is to get out of the purple box and get above that line there. But essentially, all signs are showing probability is likely that that's going to continue to happen. So if we look at all three, we have a yes from our divergence and convergence. We have a yes on our pricing and ceilings of resistance, and we have a yes on our relative strength index. So again, if you are floating right now, keep floating. Do not lock your rate. We'll likely see pricing improvements here for the next couple of days. If anything changes, I will let you know.